Hello traders and welcome to another video review. Today is Wednesday 25th of October 2020 and we are going to look what is going on the Forex markets. We are start with the event calendar, of course. We will see what is going on, what are the important events of today, and then of course we are going to do the technical analysis of the various Forex pairs, and it all depends of what is actually here on the event calendar. So let's just slide down towards the Wednesday. There you go. As you can see here, we got some retail sales data from Australia overnight. As you can see, there was a medium importance, and the actual reading was minus 1.5 versus the previous reading minus 4. So there is a slight improve, but still they are on the negative side. And the data that are ahead of us, and some of them are scheduled at 8 o'clock. For example, those data are from Great Britain, and this is important data, consumer price index, which has inflationary implications. So right now we are expecting the consumer price index to jump significantly to 0.5% on monthly basis, and to 0.4% on the yearly basis. The previous reading was minus 0.4%, which is not good for the inflationary pressure. And of course, year to year there was almost no increase in the consumer price index, because it was only on the level of 0.2%. So this data that are going to be released today from the UK will have an impact on pound finally, because it seems like the pound is a little bit the volatility in the pound is a little bit decreased, subdued during the recent days. So maybe this will be the trigger for the pound to move some direction. So the first pair we are going to analyze will be the British pound, of course, versus American dollar. As you can see, the core price index is expected to rise from 0.9% to 1.3%, which is a very nice jump in consumer price index. And as you can see, there are some retail price index and PPI input. All of them are expected to jump as well. So this is our data for the London session. And for the New York session, this is consumer price index as well from Canada, scheduled for release at 2:30. As you can see, there is almost no change in the monthly basis. It's still on the minus 0.1%, but on the yearly basis we are expecting to jump from 0.1 to 0.4%, which is a nice jump as well. The core consumer price index, as you can see, is almost not expected to jump at all. The previous reading was 0%. The forecast is 0.1, and on the yearly basis it's even forecast to decrease from 0.8% to 0.7%. The rest, like a common, median, and trimmed core CPI, are about all the same, and there is no change expected here on the core CPI indicators. The retail sales from Canada are expected to jump 0.6 to 1%. That might have some impact on the Canadian dollar. So this is the second pair we are going to take a look during our technical analysis part. And as usual, if I can say, because almost every day we got some Fed or FOMC member speech. Today we got the one from the Lally Brainerd, and the other one is from Loretta Mester. As you can see, for all of you who are trading the crude oil, don't forget 4:30 crude oil inventories. As we know, the price of the oil is decreasing across the board, and that's mostly because the second wave of the COVID pandemic around the world. So we got pound and we got Canadian dollar. So let's just jump in to the charts. As you can see here, I got my pound versus American dollar pair ready. And what do we have here? This is daily time frame chart, please remember. So what do we have here? The swing high was made 1st of the September 2020. Swing low was made on 23rd September 2020. Since then, we got a correction to the upside of this last swing down. As you can see here, we got some kind of a harami pattern around the level of 50%. It's 1.3081, so this is the top for this correction, right? At the 50%, so that's fine. Then we went a little bit lower, but we never crossed below 1.2843, which is this the technical support of this this consolidation period here. So right now, pound is undecided. There is no volatility on the pound. And as you can see, we can't even go towards the level of 1.3081 because all of the attempts to go above 1.3 are already being capped, and bearish pressure is being clearly activated when the pound is trying to rally above the level of 1.3. So this is a rather bearish chart, because the short-term outlook is to continue this wave down. So if that's the first wave of the decrease, this is the wave 2, which is corrective wave. So we are about to develop wave 3 or develop wave C, of course. The question is whether this wave is already finished, this wave up, or this correction is already finished or not. That's the question. 50%, quite enough for the pound to retrace. But right now we have to look if that data from UK, so the CPI data, will apparently trigger some kind of a bigger move, because there is no momentum. There's almost no momentum. The RSI for the last 14 periods back is somewhere around the level of 50. So this is like a neutral level with occasional jumps up and down. So there's no momentum. The pound is undecided. It's subdued. The momentum is subdued. The pound is consolidating in a horizontal range. So we are waiting for the trigger to start the move in a pound in either direction. It can go up, it can go down, but the bias is to the downside. The short-term outlook, due to this big wave in the background, the bias is to the downside. So outlook is rather bearish. So we got the pound covered. Let's just see USD cat, and as you can see, I got my analysis already on the screen. So what do we have here? The first thing we have to notice is that the bigger rally, let me just point it out, the bigger rally, right, just like in the pound case, the bigger rally went towards 61% of the Fibonacci retracement. So this is the correction of this big wave down. So fair enough, we made a high around the level of 1.3420, somewhere there, and then we went towards the trend line. We broke the trend line. We got the new local low at the level of what's the low? 1.3098. Then let me just zoom in, and then of course we have bounced. So the price have bounced towards 50% of the Fibonacci retracement, 1.3260. So this is that high. Perfect touch of this last swing down. So we are continuing the move down, and everything is showing the signs of weakness, because only 50% retracement, just like in the case of the British pound. And now we got this low here, somewhere around the level of 1.3099, 1.31, which was already violated. Just today, the low was made at the level of it's a 1.3087. So that's like a 13 pips lower. As you can see, the momentum is negative and is weak. The momentum is at the level of 39, which means the bears have control over this market. So where they are pushing the prices before the data release, They are pushing the prices toward the next technical support, 1.3043, and if this level is violated, we will test the swing low 1.2995, so somewhere around the 1.30. Anyway, so we just established the direction. The direction is to the downside, the bias is bearish, just like in a pound case. And if there is like a rally during the data release, it's just a temporary rally, which might be used to, of course, close the sell orders, or to enter the sell orders on a better price, for the better price. So right now we are going lower. This is the support and this is the other support, so please keep an eye on this two technical support levels in the Canadian dollar. The bias is to the downside. So that's everything for me for now. I think the British pound and Canadian dollar are enough to cover for today, because the data, the high importance data release is not that great for today, but we have some talks from the FOMC members as well, so please keep that one in mind as well. And I hope I see you guys tomorrow for the next video analysis. For now, thank you very much, and see you guys next time. Bye bye.